guys, Mike here. Today we are going to go over a stock that I'm sure you guys are pretty well known to this stock. And of course, this stock finally has been dipping nicely, so it is definitely a nice time to start building your position. I already have started building my position today in this stock, and I think it is going to be a good trade coming up. Definitely a stock that you might want to be holding for long term. That's possible. And of course, this stock is none other than Churchill Capital, for ticker symbol CCIV, soon to be merging with none other than, of course, Lucid, and the ticker will be changing to LCID by the end of June. So definitely that's when the merger will be happening for Lucid. So make sure you do stay tuned and stay on top of that. Anyways, guys, we're going to go over some of Lucid's charts. We're going to go over some technical analysis. We're going to go over any updates that the company has, and we are going to go over some call options that I use with the stock. And I pretty much sell covered calls on Lucid, and that is something you might be interested in, collecting free premium money. If you like that, if you like collecting free premium money, stay to the end. We're gonna go over that in the options menu at the end. Anyways, guys, let's waste no further time. Make sure you always smash that like button, hit subscribe. Make sure you check out my Patreon page. We have a few members there we are trading with, and you guys can be part of our team. Anyways, guys, with that said, let's begin. Yeah. Alright, guys, so let's check out what's going on with CCIV, soon to be merging with Lucid. And today was a pretty crazy day for pretty much all the EV sectors. Tesla was going down pretty hard. So was every other EV manufacturer. The whole EV market was down, and that's good news actually. Why? Because it does give us the chance to start building our positions and getting the stock cheap, especially Lucid, especially if you guys view this as the future Tesla stock, as a huge competitor to Tesla. This is a great opportunity. Buying the stock pretty much anytime under $23 is actually very ideal. I have traded this stock several times, and anytime you can get this stock under $23, it is a ideal position and ideal to take advantage of this. Anyways, guys, let's move on to the charts, and I want to show you how I would pretty much trade this. And as you guys can see, Lucid is starting to trade sideways, which is very good. This is fantastic news. You want a stock to trade sideways. Why? It means pretty much it's building up some momentum. People are starting to build in some long-term positions in this, and people are trying to get into the stock. All right, when you see a stock start trading sideways for a few days, that's usually a pretty good relative sign where you might see some nice bullish pattern coming up, especially like this. This one will happen just too fast, but like you could see a huge bullish pattern like this could come up like that, right? So that's why I always like to have and trade stocks that do trade sideways. Especially this one is still trading almost around the 5-day moving average. If we check out the MACD and the TSI, we can see there is some crossover coming. Excuse me, let me get this. All right, so MACD is crossing over. You can see that much more clearly here. TSI, same thing here. It just pretty much crossed over actually today, which is good, right? Today it had the crossover. That means it is getting ready to be bullish. Why? Look at that. It just crossed over and moved to the other side right here. Look at that. We are getting some bullish patterns, right? Histogram was shifting to upwards momentum, right? It has been moving that way. And finally, we could get some bars that you guys could see right here, right? All these bars pointing up. This is what we want. We want to see these bars go up. It just was flat today. We had a really flat day pretty much. It did go a little bit under than yesterday, so that's kind of bad, but it did have its momentum, right? It shot up from the beginning and then it drifted down the rest of the day. But this is good because that's why I want to see the stocks trading sideways. I want to build my position. It sucks when the stock just shoots up before you can load up on it. That's usually bad because you're not able to take advantage of building your position. All right, so as we could see, we also can see that the RSI is moving relatively stable, and that is good, right? When the RSI starts moving stable, that's pretty good. You can mark it around anytime. For me, a stock is trading under 45 RSI. That's when I think it is okay to get into a stock, especially if it starts trading around 30 RSI. That's even much better. Why? Because it just tells me that this stock is definitely undervalued, and you need to build your position in this, right? Especially when the stock is undervalued like crazy, you need to start building your position and build it up and let it go, right? Once it gets up there, once it starts hitting right here, you definitely need to be starting to sell and scale out, right? You can't just continuously expect a stock to just go up, because it's impossible. No stock ever just continuously goes up. They will have their market sell-offs, as we could see several times. We had several market sell-offs, right? And pretty much all stocks move in one trade, right? They move in 4 stages is what I like to call them. All right, stage 1, they start trading sideways. Stage 2, we have your breakout, which is good. Stage 3, we get a little consolidation, and then stage 4, we just have a decline, right? It's a sell-off pretty much. And then again, we go back into stage 1. Stage 2 comes right back up. Stage 3 is right near the next 2 days, and this one had a quick stage 4 decline right away. And finally, it looks like we are building up our stage 1, right? So anytime this stock can go up all of a sudden, right, like this, we can do it anytime like this. It could just start pulling up. A stock can do numerous things at any time. This could continuously go down too. I'm not going to sugarcoat it. It could definitely go down as well. I'd be a much bigger buyer, right? If this stock goes down, I'm going to add a lot more shares because I need to build my position in this, right? So it makes me happy when it's down a lot, because now I can take profits, and I could take advantage of it being cheap. And then once it goes up, I could start taking profits on that, right? So that is what is important. You want to definitely trade a stock correctly. You shouldn't be buying when it's in green, right? People who were buying on this day weren't doing it correctly. They should have bought this day when the stock was dripping massively, right? Pretty much it recovered all of its loss almost from the previous day, right? So, and to read these charts, you have to know it opened at the top and closed at the bottom. That's what it means when it's a red chart. When it's a white candlestick, it opened at the bottom and it closed right here at the top, right? Again, we opened at the top and we closed at the bottom. That's what a red candle represents, right? So it did have a massive pullback today from its previous yesterday. And it could keep doing this. It could keep going up and down for a few days. It's going to be trading sideways, and that's what I want to see. And finally, I want to see that breakout, right? A lot of people are definitely bullish on this stock. A lot of people want to hold this stock. They have very beautiful cars, all right? Lucid Air is soon to be coming out. They're going to start releasing their cars and having the production done completely finally, and they're going to start delivering their cars to their consumers. All right, guys, so moving on to selling call options, right? If you guys don't know how to sell call options, it's very simple. I will help you out. You pretty much want to do weekly options. That's what I do, because I cannot predict the future. I can't tell where a stock will go, how quickly it will go up or run up. That's why I only do weekly options, because I know I can handle the volatility during that week, right? If I do next week, what if the stock goes up $10, $20 in that week, right? Then I just sold my call option for absolutely dirt cheap bottom, right? And that's why I only do weekly call options, because I can control my spending. Let's say we want to do April 16th, because April 9th is almost pretty much within 2 days, right? So these options are going to probably go down a lot more. But let's say it was the beginning, right, of April 12th, right? You're not going to get these prices on April 12th. Because it's gonna 2 days is gonna pass by. It's probably gonna be less, right? So let's say the stock is trading around $23, and you want to make sure you are at least getting $25 to $26, right? So what does that mean? You're probably getting around $40 to $50 a share if you sell around the $25, $26 cost, right? So you're collecting free money, right? And in order to do this, of course, you have to have 100 shares, right? You are selling the rights to one contract. One contract is 100 shares, and that is your premium, all right? Let's say you want to do the $26 call. You're going to click on the 26. You're going to be getting 35 for this, just for the premium, all right? $35 to do nothing and wait for the stock to either hit $26. It could not, and you get to keep the premium. If it does hit 26 and it goes up, you'll be forced to sell it at $26 a share. And if it keeps going up, you'll miss out on the run, of course. That's how selling call options work. But if it never hits 26, you get to collect this free premium $35, and then you get to do it again next week, right? Next week, you'll do the same thing over and over again, and you just collect free premium money every single week for the rest of your life. And as the stock goes up, of course, you will always keep moving your price on the premium, and you'll be collecting different premium levels. One last thing I did forget to tell you before. In order to sell call options, of course, you have to click on sell call, and then you pick on April 9th, the expiration date, the weekly call you're going to be doing, and then you pick, of course, the price you want, and you continue, and then you sell for that day. Thanks again for watching my video. As always, make sure to smash that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, guys, feel free to add me on Instagram. I pretty much post there daily. I post buys and sells on Instagram, so make sure to follow me there. But I'm going to be honest with you, most of that is going to be done on the Patreon page. I want to make sure my Patreon members are getting the most for their buck. So most of that is going to be done over there. If you want to be part of that, make sure to join us there. Leave a comment below. Let me know what other stocks you like me to do a video on, or if you have a question on a specific stock, leave a comment below and I'd be happy to help you guys out. Also, guys, make sure to check out the promotion going on with WeBull, where they are giving 4 free stocks, 2 when you sign up to use their platform, and 2 more when you make a deposit of $100 or more. WeBull will give you 4 stocks, and 2 of those will be valued from $8 all the way up to $1,600. Check the link in the description box below for that. If you want another free stock, FirstTrade gives out pretty good stocks. And of course, if you want a final free stock, make sure to check out Robinhood. They also give out free stocks. All of those links can be found in the description box below. Thanks again for watching my video, and until next time, make money with Mike.